Most traders come into the market with a plan, but the problem is they don't adjust it to where the New York session actually opens. That's why they end up forcing trades into the wrong direction and have many losses. In this video, I'm going to show you how the New York Open location completely changes your trading plan and how I use it to decide exactly what kind of trades that I'm looking for. There are three possible scenarios for the New York Open. Either it's going to open inside the value of the previous day, below the value area of the previous day, and lastly, above the value from the previous day. And each of these locations basically give us our trading plan for the day. So in today's scenario, we have the volume profile from the previous day, we have the value area high and the value area low. We know that price is opening way above the value area of the previous day, so we are bullish for the day, unless price is willing to accept back inside of the value, which is the only moment that we can potentially change our bias. But for now, we're going to stay on the bullish side. So what do? We mark out the value area high and the value area low from the previous New York session. We mark out the volume profile on the pre-market price action. We draw the value area high and the value area low. In this case, the value area low is inside of the previous day New York session value area high. So we're going to leave this as one zone. And since we are opening way above the value area of the previous New York session, our bias is bullish. Unless price is willing to accept back inside the value, then we can maybe look for a retest and look for a trade to the downside. So our first trade idea would be to wait for a breakout of the value area high of the pre-market, wait for a retest, and then look for a continuation back to the upside. And this is exactly what happened. On a lower time frame, you can see there was a breakout. We had some retest here with the wicks, and then it moved back to the upside. All we need to do is just wait for this breakout, wait for a retest, and then confirm with order flow such as Big Trades or Bookmap, find a potential entry to go long and target the pre-market high or previous daily high. In this next example, we are opening way below the value area of the previous day. So all we need to do is mark out the value area low and the value area high of the previous day, plot the volume profile of the pre-market price action onto the chart. We have the value area high of the pre-market aligning with the value area low of the New York session. We're going to leave this as one zone, and we have the value area low of the pre-market also right here that later on got supported, and price just got stuck within the value of the pre-market. But our first idea would be to short from either a break and a retest of the value area low, and a second trade idea would be a retest into the value area high or the value area low, which pretty much align, see rejections from there, confirm our entries with order flow, and then look for a move to the downside, which is exactly what happened multiple times, and then later on supporting at the value area low of the pre-market back into the value area low of the previous New York session, and price was just stuck within this value. And the only way that we would accept our bias to be changed from bearish to either balanced or potentially bullish would be if price goes back strongly into value, accepts prices in this value range, and then maybe wait for a retest over here for a continuation back to the upside. And then maybe here could see a potential either rejection, or we're going to see a break, retest, and a continuation to the upside. It's all about understanding the value and where price is opening relative to that value, so you can make a clear trading plan. Now in this last example, we see that the price is opening inside of the value of the previous New York session. So all we need to do is mark out the value area high, the value area low. We need to add the volume profile of the pre-market session. We do have two levels outside of value. We have the value area high over here. We have the value area low all the way down here. We have four levels to trade off. We have the value area high of the pre-market over here, the value area high of the New York session, and both value area lows from both the pre-market and the New York session. So the New York is opening inside of the value. So the first trade idea would be to sell from the high and then buy from the low. That's the first trade idea. We did tap into the value area high of the pre-market. So basically it was a fake out of the value area high of the New York session. And then we had a strong reaction to the downside. Also not reacting from either of the value area lows. Price strongly accepted lower prices. And basically what it did over here was it broke the value area lows, and then it retested finally the New York value area low, and then continued its move to the downside, just keeping it a bearish day. So in this case, it would be a balanced bias at the start until we see price break out strongly of either the value area low or the value area high. In this case, it was to the downside. So price strongly accepted lower, not accepting this value over here of this New York session. They wanted prices to be cheaper and push the price down. So then all you need to do is after this breakdown happens, you can switch your bias to more bearish after even selling at the high, because if we open inside the value, we need to keep things balanced and we could potentially expect a more ranging session. So then we just sell at the high and buy at the low. until obviously a strong breakout happens, which happens over here, wait for a retest, and then continue to move to the downside. Now, in another scenario, we might see a strong breakout to the upside, then we just wait for a retest of either of these two levels and then continue to move to the upside. So these are the three main scenarios that you need to keep in mind in terms of the New York Open location. Go back in time, study the New York location, and just observe what happens in that session. Is it opening inside a value? Is it opening above the value? Is it opening below the value? Adjust your trading plan according to that New York Open location. Then all you need to do is focus on that bias, either balanced, bullish, or bearish, until the market proves otherwise. Is it accepting value higher? Is it accepting value lower? Or is it just accepting and staying in the same value? Because biases do change. You just need to be willing to read the market and not be stubborn on one bias idea. If you want to learn my full volume profile and order flow strategy, check out the link in the description. Anyways, hope you enjoyed this video. If you did, give it a thumbs up, subscribe to the channel. If you have any questions or requests, let me know in the comments down below, and I will see you in a next video.